Hey, this is Trader Travis, and I have another stock market analysis, a weekly video. These videos I've been trying to do the last couple of weeks here, we're on the stock market has been going up since 2009. In my opinion, we're on the tail end of a bull market, and I anticipate the market is going to fall here eventually. I don't know when. I don't try to predict the market or guess and things like that, but I do rough guesses sometime, and I plan accordingly. But for those, most of you know, I received a couple of questions. Most of you know I'm doing a new project I'm called the 10-Minute Retirement Trader. And today's video, this is an admin note. Today's video, my market analysis video, will be a video I recorded for that program. And so I recorded 2 more trades. You can watch the first 3 episodes, what I call the journey to 100K here on my website. And so I placed 2 trades for that program today, and I was going over those trades. And while I went over those trades, I just went ahead and did my usual market analysis. And since I just placed those trades today and I just did that market analysis today, I'm going to use that portion so you can see what my market analysis is. And as a bonus, you get to see 2 trades I just placed and kind of my thought process around those trades. So the video you're about to watch is about half of the original episode I recorded for the journey to 100K, and it's the half where I talk about my general market analysis and where I think the market is headed here in the near future. So you take care, and I hope you enjoy. Alrighty, here I made a couple of blueprint trades that I want to profile real quick and show you what my thought process is. I put those here in the notes section. So I placed what I consider 2 10-minute trades on UNP and TXN, and they made me a little bit nervous. But I've learned I try to not live in fear. It's like create my plan, trade my plan, and then go from there. And it's another way of saying it is I plan for the worst, hope for the best. And what do I mean by 10-minute trades? Well, there's a template I use for those who are part of the Market Club Options program. It's totally voluntary. You don't have to. But what we do in that program is we look at the general market and we try to first, it's a scan right here, top options. It's actually, I'm thankful that Market Club created a custom scan for us option traders, and these options here satisfy the blueprint that we use in that Market Club Options program. And part of that program, the quick summary of that blueprint is we're looking at the strength of the general market, and we only want to trade when the general market is strong. And so we have a criteria we use, and the blueprint that we use, we have 1, 2, 3 steps. When those steps are satisfied, it's an all go for a trade. Well, one of those steps is not satisfied, and that's the strength of the general market. So a 10-minute trade is one where you disregard the general market. That's not good for you long term, and that's a secret to success. Is in the long term, you always want to be on guard with the general market, what the general market is doing, and that's what a lot of people who fail don't realize. It's one of the first things my mentor taught me is that roughly, give or take, about 75 to 85% of all stocks will follow the direction of the general market, meaning that if the general market is going up, you can literally look at all the stocks in the stock market, and 75 to 85% of them will be going up with the market. A few of them will be doing their own thing and they don't trend just like the market, but it's like a really big flowing river, and you want to be going with the flow instead of trying to swim upstream, right? So that's the process I generally follow. But when the general market is kind of stagnant or having trouble, that's where I can trade something called a 10-minute strategy. And actually, that's the strategy that's on my website for free. And it just shows you that you can kind of look at the stock and then you run through a criteria of what the stock is, and you place those trades. And that's what I did here with UNP and TXN. UNP, we can look here at the 5-year chart. I am a little worried because it has this descending resistance here. I will be more confident when it rises above that. Volume is picking up a little bit on that stock, which it makes sense when it triggered the monthly. TXN here, we look at a 5-year chart. It's a beautiful 5-year chart. And what I'm looking at on both of these stocks is, in the past, these trade triangles are not the law, they're not the holy grail, they're kind of visual aids. What I want to see is how have they performed? Have they been accurate on these 2 stocks? And I can look in the past on both these 2 stocks and say, okay, if I followed these monthly signals right here, I would have made money. And that's kind of look at it. It doesn't predict the future, doesn't guarantee that in the future I'll make money, but it's kind of a yardstick, I guess is the word I'm looking for, or kind of probability type of thing. it's what most likely will happen. It's like predicting your weather. You can look up the weather for the next 2 weeks, and if it says it's going to rain in 7 days, that's not guaranteed to happen. It's kind of like, well, this is what's most likely going to happen based on the signs that we see. So those are the 2-minute trades I place. They are and of themselves strong stocks. The general market may be having trouble, but I was willing to place 2 trades here. And one of the reasons I'm nervous, 2 of the reasons I'm nervous, one, the general market, stock market has been going up since 2009. Market crash is coming. I just don't know when, but I do know it is coming. So every time I place a trade, I'm like, this has to eventually end. Let's come here to my broker account, and then we'll look at the trades in a second. But this is, I can come out a little bit further. I can do a 10-year chart. I mean, think about it. The stock market has been going up almost for 10 years straight. So every time I place a trade, my thought process is this has to eventually end. It cannot go on forever. That makes me cautious. It makes me realistic, and it prevents me from getting so optimistic. And that's what gets people caught up. They get so optimistic on making money that they forget all about losing money. And so that's one thing that makes me nervous. The second thing that makes me nervous is because of what I just saw. Yeah, the stock market is going up right now. The NASDAQ is having some trouble, according to the Market Club trade triangles. And so, going back to this thing about 75 to 85% of all stocks follow the general market. If this market, happens to fall in price, it's going to take most of my trades with it, and I'll start losing money. So that makes me nervous, and that carries on. Part 2 is I don't want to have too much risk, too much of my account out at any one time. So we can see the NASDAQ here kind of going flat. That's what's going on, and that kind of makes sense based on the trade triangles. The trend score is weakening, and it triggered for red daily. So when I look at my account right now, it's up 23%. That's the booked profit. I only have 4 open trades, was 2, and then I just opened 2 more today, which we'll cover just here in a second. And so I'm looking at that, and I'm saying, okay, I am up 23%. These 2 trades right here could take this down maybe 4%. So I can look at this and say, this is my book profit, but I still have some open trades open, and this could go down maybe to 17%. So that's what I'm always kind of balancing. When I have a little bit too much risk out that I'm comfortable with, meaning that I don't want to give up this 23%. It was hard earning it, part luck, part skill. I'm in a good place. I'm beating the S&P by a long shot here, and I don't want to screw that up, right? So that's another reason adding 2 more trades that I did today make me a little bit nervous, because I'm like, well, I could just screw up and start losing all the money I made. Now, I want to talk about this. People will focus on this. They're like, wow, Travis is up 23%. The general market is only up 3%. Well, it's kind of misleading. One, the portfolio has only been running a few months. It's easy to get lucky in a few months. 2, you got to also realize that this performance is coming from 3 areas, 3 different approaches. And one of the approaches, I'm adding money to the account, God contributions, also called get out of debt contributions. And I won't cover that here. That's in the first 3 inaugural episodes of this 100K journey. But some of that performance is from those contributions. 2, it's misleading because we can look here. Let's pull up another portfolio I'm running. These are the only 2 portfolios I am running for the meanwhile. These portfolios, this portfolio you're about to see here is a portfolio that I'm using in the Market Club options program. They have their own follow along portfolio where I show them me applying the blueprint in real time. That portfolio is actually lagging behind the market. This is also misleading because yes, it's lagging behind the market in terms of performance, but it's kicking the butt of the market in terms of risk. Meaning that in order to earn this 19%, you had to have 100% of your money in buy and hold. For me to earn this 11%, man, I had like 95, 97% of my money in cash. And I only, risk 1 to 2%. I had these very low risk trades out. The trades made money, and then my account grew. But I've always had the majority of my account in cash because generally I have 2 goals: beat the market in terms of performance, beat the market in terms of risk. I hate losing money. I do not ever want to be like buy and hold investors where I'm suffering a 40 to 50% loss. But so I'm accomplishing one of my goals, failing on the other. I'm not beating the market in terms of performance, but I am beating it in terms of how much money I have at risk in the market to earn this 11%. I would have been up I was up like 30 something percent, but in 2016 I made some boo-boos and I wound up losing money. And that's what I mean by this performance right here in the 10-minute retirement trader account is misleading, because this Market Club account is more realistic. It's been running for at least a couple of years. And so you see the good and bad, you have a longer time period, and things kind of work themselves out. And what I mean by that is, come back here to the 10-minute retirement trader. Yes, I am up 23%, but look at what happened in the month of September alone. Just one flipping stinking month, I lost $2,300. And that's what I mean by that performance at 23% you see so far is misleading, is because it's not factoring in the mistakes I can make 6 months from now, like I have in Market Club options. And so I can make a couple of more mistakes like this where I lose $2,300 in 1 month. And then this nice, beautiful 23% you see right here will start going down to a more realistic performance of maybe 2 to 5% a month versus, averaging like 8% a month, which I'm doing right now. So that's why it's misleading. Don't get all your greed gland and start drooling over this. Wow, I can just make a bunch of money. No, you're going to make mistakes and goofs ups along the way. And I have here, and I wound up losing at least $2,000 in September. September is not over yet. We still have about 2 more weeks left in that month. So we'll see how much of this I can recover or make back. And I kind of talked about that mistake in the notes section here if you're part of the 10-minute retirement trader program. So that's all I have for you right here. I just wanted to walk you through kind of my thought process as I literally just placed 2 more trades a day. So my thoughts are fresh in my mind. I'm nervous because I added more risk to my account, but I'm not going to live in fear. I have a thing called I trade what I see, not what I think I'm going to see. And what I see is the market's still going up. And so I'm going to trade that way. But I keep in mind that this has to end eventually. And when it ends, I want to be prepared. I don't want to be caught with too much of my account out at any one time. I can't predict the future. Some people think you can time the market. I don't believe in timing the market in a sense that I don't believe, the market is going to crash on this date. I can have a rough estimate, and my rough estimate was that the market would crash sometime on or around or before, November 2018. That's not even guaranteed. I don't plan for that, but that's kind of like, the market's been going up since 2009. It can't keep going forever. Well, no, it can't keep going forever, but we do know there's something called reversion to the mean. Most professional investors know that, is that things kind of revert back and resettle. And so that's how I can anticipate the market is eventually going to crash. We just don't know when. It could keep going up for 3 more years. That is why I trade what I see. I don't want to think, the market's going to crash next month, and I get scared and I don't place trades. And then the market keeps going up for 3 years. What's going to happen? I'm going to feel like an idiot. I'm going to miss out on money. So I'm like, no, the market's going up, so I'm going to keep placing trades. And when the market starts going down, I'll keep placing trades, keeping in mind and keeping my finger on how much I'm risking of my account. Okay, that's the key thing. Then when the market goes down, I'll switch strategies, and then I'll be prepared to make money when it crashes in price. So that is all I have for ya. I will see you in the next update. All right, bye-bye.